Let's be honest, we're just like you, in the grind every day, going to work, trading our time and energy for money, trying to be a good steward of what we make. All of those things are incredibly important. And just like our clients, many of you guys are making a great living and have started to create great wealth. But the ones that figure it out, they figure out how to not trade in their time for every bit of the income that they receive. They have figured out how to make their assets work for them, and not just getting their assets to appreciate in value, but having their investments actually produce cash flow. And so today we're going to tap into a huge topic for high net worth individuals, a topic about passive income. I'm Andrew Nida with Asset Management Group, sitting alongside Moise Piram.
Hey, Andrew, and everyone. This is a great topic. We've spoken to a lot of our clients, and they've realized and they've told us that they made a decision at some point in their career to make and have multiple streams of income, multiple streams of passive income for them, because they had a bigger picture in mind. They knew that, like you said, trading their time and effort for income wasn't the only key strategy for them. So we're going to talk about it today. And before we jump really right into it, I'd love for everyone to like, share, subscribe to our channel, subscribe to our channel, share this video, share some of our old content. It's good content. We've gotten a lot of feedback from the audience, and so definitely do that. But let's talk about passive income, because I'll admit that when I'm going through social media, whether it's Instagram or what do you call it, Facebook. I'm scrolling through it, and then sometimes I'll come across a page where it's like, download this ebook or download this guide, or I'm selling this course for $27, whatever it is, right? And I understand what they're trying to do. Mm-hmm. They're trying to have income built by them, creating some type of content, but then having that content continue to build income for them without them actually doing anything for that income. And so I think that's a riddle.
Oh, it sounds great.
It sounds great. It sounds great. But I think they understand, right, that the power and the road to true wealth isn't just made by trading in your time and effort. You have to build these multiple engines to create income for you.
Yeah, and I'm gonna go back just to kind of the basics here. So with passive income, we're talking about literally your investments, whether it's cash, whether it's real estate, whether it's investing in the market, anything that you have created that's out there with the intention to grow. You're using that investment to create cash flow. Right. That's all passive income is. You wake up every day, you go to work, that's active, but now we're trying to figure out how to create the same amount of cash flow, if not more, by using your investments. Mm-hmm. And, the truth is there's a lot of that content online. And what I have found, being that you and I get the opportunity to work with what used to be, I call the everyday millionaire. Most of our clients, they're hardworking Americans, and they've gotten to a place where, the old school Dave Ramsey, everyday, next door neighbor millionaire who worked at Anheuser or Lockheed or Bowen or some of these big organizations that have pensions and they funded their 401k, they just did the right thing.
Right.
They don't now just have $1 million. They've got 2 million, 2.5, 3 million, 2 working spouses. And so our clients, they live in that world, 2 to 5, 5 to 8. And there's a whole different set of complexity that goes along with that. And there's a lack of understanding and service that's needed for those types of clients, because what they have done every day is they did the ground roots American way. Get up, work hard, go home, save, pay for your life, and go back and do it the next day. This passive income is a huge topic. It needs to be something that's brought to them so that they can figure out how to actually get their investments to work in a way that's going to generate cash flow. And we'll start, I guess, with something very easy, high-hanging fruit, and that's, passive income created with traditional stock market investments.
Yes.
Okay? And so the easiest one that comes to mind is buying these, high-income producing vehicles, items like dividend-paying stock. Mm-hmm. You're buying companies that may not have the appreciation value. Maybe they've already grown significantly. They're a value-based company. But in exchange for maybe them not having the ability to create a lot of equity appreciation, and I'm not saying they can't, mm-hmm. but what they do is they tend to give back cash flow.
Yeah. Dividend stocks are in my opinion, a really great way to even reduce a little bit of volatility in your portfolio, because, like you said, some dividend-paying stocks may not have the ability to appreciate like your non-dividend paying, like your growth stocks, for instance. And well, first of all, I'll take a step back. So, what dividends are in general are dividends are a percentage of income that are given back to you as a form of participation in the stock for that company. So, a company earns profit, and as a shareholder for that as a shareholder of the company, they give you back a percentage of their income that they've earned. And so it's a great way to invest because not only do you benefit from that stock appreciating over time, but they give you a piece of income for investing in them. And so that is almost a true passive way of generating income, because you've invested in that company. And yes, you want that stock to go from 100 to 200, from 200 to 500. But throughout that journey, and in that journey, you get a piece of income from what that company has earned.
That coupon's nice.
That coupon is really nice. And so, yes, it involves some activity in your end, right? You actually have to purchase the stock, right? And to generate a decent amount of income from that stock, you have to have a good amount of shares in it. So it has to be something you have to be proactive in, as far as continually to invest in that stock or that ETF. But you are rewarded with your patience. Mm-hmm. And a lot of retirees like it because it can supplement Social Security. If they're fortunate enough to work in those companies that have a pension, you have that pension. And then now you have an extra layer, or another layer on top of your income of 5, 10, 15,000, depending on how big your portfolio is, of dividends that are providing you income. And so it is a nice way to, again, supplement some of your income. But I would say that it's not easy as far as, having a portfolio big enough to create a sizable amount of dividends. Mm-hmm. I said before, you got to be patient, right? Stick to some type of a process, underlining and understanding which stocks to invest in. But again, long story short, it is a great way to add some income into your overall plan.
Yeah, and I think to your point, it adds some stability.
Yeah.
Right. So what also kind of goes in that world is things like I come to thought would be like just even savings accounts, money market accounts.
Oh yeah.
A very simple form of investment, but you think about like that's a widely used and applicable source of creating passive income. People put money in a money market, a CD, or whatever, and the idea is that it just generates cash flow for you or some type of small interest payment. And that is passive income.
It is,
right?
It is, yeah.
But then you can go all the way, like you're talking about, with dividends, cover calls, bank notes. I mean, there's a variety of different investment vehicles within the market. Some may be more restrictive than others. Some with maybe greater contract limitations or liquidity concerns. But one thing I like about dividends is, and I think it's something that we use frequent for clients that are trying to generate cash flow from like an income bucket that we're using within their retirement plan, is I go back to Warren Buffett. I don't even know if you saw this, but recently Warren Buffett made a statement this year in 2025 that against his historical love and passion for real estate, he came back and said at this point going forward, he feels that you can get into investments in the stock market with opportunity and cash flow and generating income greater than you can with the complexity of trying to get into the real estate market.
Really? I didn't hear that.
And his thought process was surrounding the challenges with obviously real estate value. Okay.
Yep.
The challenges with financing, the competitiveness of the market when you're dealing with, especially in a commercial space where you're fighting against syndicate programs or private equity guys, right? So just the challenge to get into that space overall. And then being able to generate positive cash flow with the cost to get in it, and then the overhead to operate it. So to his point, it's I think I would conclude the same thing. Dividend stock, not that it's something that you should use in place of real estate if you're a real estate investor. What we're saying is it's an option to create passive income, and it's kind of a turnkey.
Yeah.
Right. Make the investment, set it, you don't have to forget it. We're not going to forget it if you're using us, but set it and let it be.
Yeah,
just let it do its thing.
It's a low barrier of entry point. You know, you can just open up an account at Schwab, and find a good dividend portfolio, a good dividend ETF, and invest.
Yeah,
and that's it.
Let it be,
and just let it be. So you're right. Yeah, that's a good point from Mr. Warren Buffett right there. Real estate. Well, let's jump into real estate, right? I mean, real estate maybe number 2, not in priority, but the second way of generating income, passive income, is real estate.
Yeah.
Whether it is rentals, whether it is buying and flipping, real estate is a good way of generating passive income.
Yeah.
But there are, like you mentioned before, there are a little bit of complexities behind it, right? Finding the right deal first and foremost.
Well, here's what I hate. Okay, I completely disagree with this thought that real estate, if you go online and you YouTube videos and you're wanting to get into real estate, like you said, there's a lot of these clickbait sales tactics to buy into programs that's going to teach you how to create passive income. All right, real estate, to my knowledge and experience, is not just if you're doing it yourself, if you're not part of another program, a private equity group, a syndicate, a REIT, or whatever. It's not a turnkey passive process.
No.
Okay? So I think that's got to be exposed right out of the gate. Real estate over time can create passive income, for sure. But it is very much active if you have any involvement in the process of buying and renting real estate.
Oh, yeah.
Right? Matter of fact, I think if you look at most real estate investors, the majority of them out there, and there is a statistic for this, I've read it in a book and I can't recall it right now, but the amount of investors that jump into real estate with this goal of creating passive income, they end up buying one property, maybe 2, and they end up selling it like 5 to 7 years later and never do it again.
Really?
Yeah.
I haven't heard that.
And it's and the reason is because, like we're talking about, our clients, they get to a place, they're making good living. They're, in their early 50s, late 40s, early 50s. They've already created a reasonable amount of wealth. They're on their pathway to retirement, and they're like, I need to do something else. And what comes to mind? Passive income.
Mm-hmm.
Then it's real estate. Then they're like, okay, well, that's what I need to do. I go buy real estate. So they go buy a rental property next door, and they drop $250,000 on this property. They got to put some upkeep into it. And then they figure out once they start renting it that they're break even on their rental income relative to their outflow expense. And then the person stays in their property for 12, 24 months, screws up the property. Then they got to come out of pocket. So now they're running at a loss. It's the way that world works.
Yeah.
Unless maybe we go through a housing market decline and we end up like it was in 2009, 2010. I give you a personal example. Right now, we're having to remodel a rental property, right? And it's not going to be an inexpensive remodel. It's a residential property, and let's say it's going to cost me $15,000, $20,000. Okay. By the time we go through, we're going to do all new flooring. We're going to paint. We have to get a new stove because it got ruined. We got to put two vanities in, and we are going to go ahead and fix the plumbing on this house. So let's say we're $15,000, $20,000 into the work. It rents for $1,200. Okay. Well, I mean, every money that I'm going to be spending, first off, it don't seem like active, number one. Number two, I'm not going to do the work myself, although I'm tempted just because of the cost to get things done.
Right.
But it's like, it's not active.
It means not passive.
Right. It's not passive.
Yeah. It's definitely active in this moment.
It feels like an active loss and not a passive positive income. Right?
Sounds like a job.
The more I think about it, I think I'm jumping out of real estate. I'm going to be like one of those other stats, one of those guys that gets out in a few years.
But I think that's a good point. I mean, what you're talking about, and that's just one property.
Right.
Imagine if you had, people. I think that's a good point that you mentioned before, because I don't want anyone going into investing in real estate and thinking they're going to have 5, 6, 7, 10 properties that are generating rental income, and not thinking that at some point they may have 3 properties that have to do at the same time that are going through the same type of work that you have to do right now.
Right.
Imagine that you just have one, right? Imagine if you had 4 of those type of properties that you have to do the same type of maintenance at the exact same time, find new renters, all that stuff, and you sit back and think, I thought this was passive income.
That's what I think all the time. I'm like, I thought this was passive. Someone lied to me. No, and then it's like, okay, so there's going to be, someone that watches the video that owns a real estate management company. They're going to be like, well, it's because you don't use a management company. Well, the reality is first off, to tap into some of the tax benefits, I can't use a management company, right? Or I can't get the tax benefit, which is ultimately the value add. So if you're looking for passive income and you don't get the tax benefit of real estate, then you really got to analyze the deal to make sure the deal's right. But yeah, it is a active business. Now I'm making it sound bad. Real estate's a great investment.
Yeah.
It's a great investment, and it can fall into the category of passive income, because eventually, when the system is operating, the idea is you're waking up every day going to do something else, and that rental check's continuing to come in. My point is just being clear that as an investor, just because the news and the noise points a higher income earner and someone that has wealth to go buy real estate, don't get caught up into the knee-jerk reaction. That's what I need to do. Pause and let's figure it out. You got to make sure the deal's the right deal for you.
Right.
But real estate's great. On that same note, though, there are some things in the world of real estate that I'm not a fan of. Okay. And there's maybe some contrary views when it comes to this, and that's okay. Totally for it. But I have a bad taste in my mouth when it comes to things like REITs. Okay. Matter of fact, I remember my dad when he was in the industry, he purchased a book from another advisor that was loaded with REITs. Okay. And the problem was with the book that he purchased, and shame on him for not doing the research and getting it ready, making sure that it was the deal he needed to get into. But he took the man's word for it. These REITs were non-tradable. They posted a reference of a balance that actually didn't exist. Many of the REITs were in lawsuits. And so I go back to...
Was he thinking about these REITs as passive income for himself?
No. He purchased this business, advisory business, from another advisor, and the advisor that he bought it from had sold his clients a bunch of untradable REITs.
Okay,
right?
I'm with you.
And so, like, when I look at REITs now, obviously I have a little bit of a bias and a filtered lens, but the truth is like a REIT oftentimes, and I'm sure there's great ones out there, but a REIT is, an investment that can, and many are, very restrictive. Okay, you can't just get your money out when you want to. Well, that's true with real estate, right? You go buy a house, you can't just go take your equity out of your house without a process. And that's true with REITs as well. REITs are very much dependent on the grouping of the investments that are involved within that project. Oftentimes it's commercial investments. And so as a result, depending on where the economy is, depending on where the business and how the business has been ran, your money may be
locked up,
right? May be gone, may be caught up in a challenge or a lawsuit. And so even clients that we have had over the years have faced these challenges. Matter of fact, most of the REITs that we have on our platform right now for our clients are clients that brought REITs in that can't get rid of them.
Right.
So
yeah.
I just have so I say all that to say, when you're looking for passive income and you kind of get through to some of these investments, you're going to see the good because you're looking for the good and how to create passive income. You got to be careful.
Yeah.
And you really got to say, is it even worth losing liquidity for the sake of what? 4 or 5%, 6-7% yield when I can go generate more than that in the stock market or buying dividend paying stock.
Yeah, I mean, I think that's why I think everyone should have do your due diligence before you enter in any type of exchange for your money for whatever it is, right? Whatever you're exchanging it for. But yeah, I mean, I think that there are some of these ideas that are out there that people promote as if it is the next best thing or is the best thing since sliced bread. And if it was easy, then everyone would be doing it. And so the fact that there are these specialized programs or these specialized opportunities that are out there, just in my opinion, when I see that, it always makes me want to take a pause, take a step back, and really see the fine details behind it. Yeah, because you're right. Everyone that I've come across that has these type of REITs that are non-tradable REITs, they're always coming to us with negative stories, right? Now there are some tradable REITs, right? I mean, there are some REIT ETFs, and those, depending on the underlying holdings behind them, They may fall into the same type of issues with the commercial real estate. They could be. I've seen a lot of REITs that have like nursing homes or facilities within inside the REITs themselves. But the good thing about those is that they're tradable.
Right.
So if you don't like them, you can just go ahead and just sell them, just like sell a stock, right? But yeah, you're right. I mean, again, just do your homework, do your due diligence, make sure that before you enter into any type of arrangement, any type of agreement, that you understand the layers, and that's why you should have an investment philosophy.
Right.
Right. I believe that everyone should have their own investment philosophy, and by with that means what type of risk you're open to, on the upside and on the downside, what type of investments you're willing to say no to, what investments you're willing to say yes to, and just understanding what your ultimate goal is, right? And
maybe it doesn't need to be, to your point, maybe it doesn't need to be income. For many investors, creating passive income, the process of creating passive income can be very important to the future of the plan, right? For instance, we buy real estate, right? We own real estate, both commercial, residential, and short-term properties. The intent of that is not so much the value it creates today or the passive positive cash flow it creates today. In fact, it doesn't. We just talked about it. But there's a benefit with it not creating the passive income today, to me. You look at that same view 10 years down the road, 15 years down the road in our story, because we do have a financial plan, the ownership of that portfolio, the organization of that portfolio, and the ability for it to generate cash flow will be exactly what we need. And at that time, likely will be a lot less active and so much more passive.
Right.
And so, to your point, yeah, when you have a game plan and you're looking at passive income, I think one of the questions you have to ask yourself is, do I need the cash flow today? Is it going to benefit me from a tax perspective? If you're 50 years old and you already have, $1.5, $2 million in your 401k, $3 million in your 401k, whatever it may be in savings, and you're like, I need to diversify, I need to tap into this passive income world, but you're still making $350, $400 a year, you don't need to generate positive passive income, right? You can't offset it, and so it's going to be an additional tax liability, right? So the generation of income sounds great, but it's creating a negative effect on your tax returns, right? So maybe that's not the end goal. Maybe the end goal is to buy investments that will eventually do that, right? So then how you get into the investment, the amount of money you leverage, instead of putting too much money down, like all that matters. So I think to your point, those are great questions to ask. Make sure you have a plan and make sure you know that passive income is needed today, tomorrow, or whenever it is, and work around that story.
Yeah.
Businesses.
Yes.
What do you think?
It's depends on what you're thinking about, right? So, like, if you're thinking that starting a business is going to be passive, then I would say
you're an idiot.
You're an idiot. I would say that because starting a business is not going back to real estate, right? Starting a business today is not passive income. Well, sorry, it's not a passive process. Okay. Right. Now, maybe after 10 years of you grinding it out and building the infrastructure, then maybe that business at some point will generate passive income for you, right? But I would say the idea of creating a business today and it automatically you're stepping into some type of passive income stream, I'd say you're widely mistaken.
Yeah.
Now, if you're buying into a business, right, that's already up and running, and now you're just maybe fueling it with some cash, or it's up and running, and I was watching. What was I watching today? I was watching a video by Carlton Dennis, the CPA, Tax Alchemy, I believe it's the name of his firm or the name of his channel. But anyway, he was talking about 5 ways to get into real estate without any money. And one of it was if I want to buy a property and I don't want to put a down payment in, I can find someone who already has cash flow, who already has a history in real estate, have them put the down payment for me. We come into the process together, right? And I take over maybe the rental. I take over the negotiation. I handle all of the property management, and he or she just came in with cash, and we split the profit 50-50. Okay, so as So where's the passive income in that aspect? Well, that investor who put the down payment in now gets to split the rent 50-50, gets to split the appreciation of the property 50-50. So for that investor, that's kind of passive because all they had to do was outlay some money and not have to worry about any of the complexities. So in that aspect, I think that, again, going back to business ownership, if you're coming in with an established business and you're just a silent partner, you're just fueling it with cash and then you're splitting some profit behind it. Okay. I've heard stories of, buying ATM machines, buying vending machines,
Yeah.
buying laundromats.
Yeah.
Right. And those things are just running on its own.
All those are real possibilities.
Yeah. Yeah. So I'm on the fence with it as far as the idea of a business is passive. It goes back to the right business. But if you're thinking, by far, I'm going to start a business and it's going to be passive right then and there, I think you're widely mistaken.
Yeah. Yeah. Starting a business, I couldn't imagine. But I do think your point is correct in that we do have several clients. And I guess the higher you go up that chain of wealth, the more you see individuals that participate in being a silent investor, in different ventures. Oftentimes it's ventures with friends. It could be, and it could be private capital. It could be, these investments that they're getting into. Maybe it's a franchise or something like that. And those in that sense, yeah, it very well can, create passive income. It could be a great opportunity. Once again, it's just one of those things that you just have to analyze the risk. Look at the income that can be generated relative to the amount of cash you got to put up front. What's your cash on cash return? And then from there, you have to ask the question once again: is income really the best thing for the plan today? And is there any upside potential with the business that I'm participating in? But definitely businesses can be passive, and I think you see that with I'll give you an example. Shark Tank. You ask the question: how do these guys own so many companies? Right? Of course, they have I'm sure they have a system and a process that's much greater than any, average American, one of us that can create today. But the truth is they're posed these opportunities from these individuals that have built the foundation of their businesses. They're coming in and overlaying capital, and they're overlaying a process. Could be a marketing strategy. It could be whatever. But their time and energy actually injected into the business, depending on probably the agreement, is probably very small.
Yeah.
Right? And so their ownership as a result of the capital infusion is, in essence, it's a cash-on-cash return
From day
passive
one.
income.
Yeah.
Yeah. So sweet deal for them, right? I mean, actually, the show is incredibly thought out, and it's actually brilliant. You take everybody in the U.S. that has an opportunity to present all their incredible, awesome ideas. You don't even have to be innovative. You just build off the innovation of others and throw capital on top of it and create passive income. Can we do that?
Yeah,
like a
why
small,
not? Yeah.
no, but but that is in essence small business creating passive income. And so it's a great idea. All these concepts are great. There's no one investment that's ultimately going to be better than the other, right? Some people win it and kill it with real estate. Some people win it and kill it with dividends and equities and stock investments. Some people kill it and win it with businesses, right? It's a matter of what risk can you afford, what available assets do you have to make a change or to make a move, and what's the deal that makes the best sense for you, right?
Yeah.
And the plan.
So what it comes down to, right? I mean, you've mentioned it. You've mentioned this word a couple of times, plan. I think everyone just needs to have a plan, right? I mean, you start asking yourself, pros and cons, weigh in the capital infusion, weigh in the time that it'll take for you to build, to start. How much time do I want to go ahead and start, build? Do I have the patience to wait, right? You just have to have a plan. And I think those who are successful in these ventures have a plan. Right? And your plan has to be flexible enough, and we say all the time to our clients, flexible enough to change as new information comes in. Like real estate right now, being able to. I won't go into tangent, but the idea behind it is you have to have a plan, right? And the more you are engaged with your plan, I would say the more successful you're going to be, whichever direction you go to.
Yeah. And I'm gonna throw one more out there because this is something I've got to throw it out there on behalf of my sister because she's a real estate investor. Her and my brother-in-law, and they started their business through the process of borrowing private capital. And so obviously there is an opportunity out there too when it comes to lending, right? You have private credit, debt, real estate funds that you can be a lender to other investors. And that's a world where just I think the risk has to be assessed more so than the available return, right? Because I have met many real estate investors, and although my sister and brother-in-law, I would pump them up because they're incredible, very smart. The deals they get into, it's just amazing to me how they can consistently find the deals that they find and continue to turn the properties they turn. That said, not every investor's like that, right? There are many investors that are like, sign me up for real estate, passive income class, that's what I need. And the class teaches them on how to leverage private equity or, private credit. And then they go to, Johnny over here, hey, buddy, I need 50 grand to go get this first deal. I'm going to work you in on it, yada, yada, yada. They get 50 grand and they blow it up. You know what I mean?
Yeah.
So it's like, so you got to be cautious once again, but it is an option. The gentleman that in the company my sister used, I want to say they used them for the first probably 2.5 years consistently. I mean, they were turning 10, 12, 15 plus properties a year, and they used this group for the private lending. They were able to make cash offers on every deal. It was a win for both parties. So it can be out there. You just got to be careful.
Yeah. Yeah. No, that's and there's a world out there that a lot of our high net worth clients are using. These private credit, private debt, private equity deals that are out there, and you don't have to look for Johnny on the spot around the corner, right? These are some really they've been vetted out. They are working with different. We have access to some of these options that are out there, but that world, because of the complexity and layer behind it, like you said, the everyday millionaire that are at $3, $4, $5 million, again, they're looking for ways to diversify their overall holdings.
Yeah.
Right. And that world can be very successful.
Yeah.
Can be very successful, but you've got to do your due diligence. You've got to be, you have to be smart and wise in the decisions and the deals that you go into.
So I'm gonna put a wrap on the conversation. Passive income is a great solution. Creating a system to create passive income is a smart idea. The idea, though, ultimately is to have a plan, right? And if you're like many of our clients, you're the hardworking American, the blue collar individual that created 2, 3, 4, 5 million in assets over your lifetime. You're 50 years old. You're on a pathway to generating that, right? You generate great cash flow. And you're considering, hey, is what I'm doing actually the best for me? Is my seasonal life a seasonal life that actually supports the concept of alternative investments and getting into creating passive income? There's a lot of questions to ask. If you need help, ask your advisor. If you don't have one, ask us. We're a team that can definitely help you figure out if passive income is the right move to make, the right time to make it, if it's going to work for you from a taxable standpoint, and is it going to support your plan well. That said, Asset Management Group here to give you clear guidance, education that's needed for the everyday millionaire, the everyday American just like you. If you ever need any support, always reach out. By all means, like our content. We greatly appreciate it. Share it out there. We love getting good, clear, confident guidance to you and to everybody else. Have a great week.